Okay.
Good morning, sir.
Morning,
How are you, sir?
So we are going to continue from where we stop on pioneer legislation. So, like I said, by God's grace, we finish question on pioneer legislation today. It probably will move to the next topic. But for the sake of sacrifice, on Friday, this coming Friday, we have to have 40-minute lecture. So I've said that. So on pioneer legislation, I started this topic last week. I don't know whether I've solved any question or I've not solved any question. Have we started solving question on this pioneer legislation, or we have not solved question at all on our last class?
I'm even attending for the first time. Last class I was not around, so I don't know whether you have solved.
Okay. You are not around, but some people are around. So I explained pioneer legislation last week, but do you watch my video lecture?
No, sir. I just come back this week. I will watch it, sir. But let's just continue, sir. Thank you.
Okay.
Thank you,
Mr.
sir.
Wellington, do we solve question last week?
Please, sir, that last week, I was more or less not on the class because I was on transit. And I was not linked to the class or the greater part of the class, sir. So I'm not in a position to
Okay.
say yes.
Okay. Oh yeah, let me just say. Okay.
Sir, we did not solve any question. We just go through the lectures, no question.
Okay. So, yeah, I will just do the summary view of what pioneer legislation means, and we start solving questions today. So, for the sake of those who are not around last week, what pioneer legislation means is tax holiday. Tax holiday means government grant tax holiday to some companies because those companies, they are manufacturing companies. And the product that they manufacture, most of the products are imported products. But if they start manufacturing it in Nigeria, it's going to contribute to the GDP, to the economic growth of Nigeria. So it's going to attract more foreign investors. So as a result of that, government now feel that such kind of product, in order to encourage the manufacturer that will be manufacturing it in Nigeria, we need to give them tax holiday. Within that tax holiday, they will not pay company income tax, they will not pay education tax, any form of direct tax, they are going to be exempted. And within that tax holiday, if they incur loss, that loss is going to be carried forward to the post-pioneer period. In pioneer legislation, we have 3 periods. We have pre-pioneer period, we have during pioneer period, and we have post-pioneer period. Pre-pioneer period means the period in which the company that requests for pioneer certificate, the period in which they are in business before the pioneer status was granted. So what the law say for the pre-pioneer period means a year before you are giving pioneer certificate, you need to apply cessation rule for that year before you are giving pioneer certificate, assuming you have been in business before you request for pioneer certificate. However, during the pioneer period, you will not pay tax. You will not pay company income tax. You will not pay education tax. If you incur loss during the pioneer period, the net loss, the aggregated loss, is going to be carried forward to the post-pioneer period. Likewise, too, during the pioneer period, if you have any qualified capital expenditure, you will not compute capital allowance on it. You are going to assume that qualified capital expenditure is acquired on the first day of the post-pioneer period. You are going to assume the qualified capital expenditure is acquired on the first day of the post-pioneer period. Aside that, you now compute the capital allowance in the post-pioneer period. So this pioneer incentive is for initial period of 3 years, which can be extended for additional 2 years. That additional 2 years is subject to satisfactory performance of the initial 3 years. So pioneer status is not given to any company. It's mostly given to companies that manufacture goods, and those goods are going to contribute to economic growth and development, like manufacturing of textile, manufacturing of cement, manufacturing of production of tea, agricultural products, rearing of animals, all such kind of products that are very important in the economy, that as at present, we are importing them, and we want to ensure that we should be producing them in Nigeria so that it's going to have impact on our foreign exchange. So those are the kind of products that they are giving pioneer certificates. So it's otherwise called tax holiday. Tax holiday is an incentive, it's a tax incentive. And it's not automatically given to a company. You apply for it, company apply for it. You understand? You apply for the pioneer certificate. Once you apply, if you are qualified for it, you will be given. And there are some criteria in which you will be, they will assess your company before they can say that you are qualified or you are not qualified. They look at your non-current asset, which is your fixed assets too. You must have a minimum prescribed value of fixed asset before you can be given such certificates. So that is what pioneer certificate really means. That is what pioneer certificate really means. So we'll now look at, let's look at what question 1 is. Let's look at question 1. So question 1, practice question 1. We can look at practice question 1. Practice question 1. So somebody should help us read the practice question 1.
With its production.
Oh, yeah.
MNA Tiles Limited was granted a pioneer certificate with its production day as 1st July 2018. The following information has been obtained from its record. 1. Accumulated profits as at 30th June 2021, 4,950,000 naira. 2. Capital expenditure incurred during the pioneer period as certified by the FIRS. Building 2.4 million, plant and machinery 2,250,000, motor vehicles 1,500,000, furniture and fittings 750,000. After the end of the pioneer period, the company adopted 31 December as its year end, and the adjusted profits from the new trade were 6 months to 31 December 2021, 1,800,000. Year to 31 December 2022, 2,700,000. You are required to compute the tax liability of the company for the relevant years of assessment.
Okay, thank you very much. MNA Tiles was given a pioneer status. The production day means the date in which the pioneer your pioneer period starts. What is the production day of Eminites? 1st of July 2018. So when will the pioneer period is going to, when is the, what is the range of the pioneer period? That means the pioneer period is going to start in 1st of July 2018 and is going to end when? It's going to end when? We know the pioneer period is going to be 3 years. From 1st of July 2018, when is it going to be 3 years?
2021.
That means 30th of June 2020 what? 2021. 30th of June 2021. That will make it 3 years. That is the pioneer period. 30th of June 2021. That will make it 3 years. From 1st of July 2018. Because 30th of June 2019, 1 year. 30th of June 2020, 2 years. 30th of June 2021, 3 years. Now, the accumulated profit as at 30th of June 2021. This accumulated profit means the profit for the 3 years pioneer period. That is the reason why they call it accumulated profit as at 30th of June 2021. That is the profit for the 3 years pioneer period. So this is the profit that will be exempted from tax. That is accumulated profit. That is the pioneer profit. In this question, there is no pre-pioneer period. We are not told whether the company have been doing business before they're giving their production day starts. So no pre-pioneer period. So since your pioneer period ends in 30th of June 2021, when will your post-pioneer period start? The post-pioneer period, when is it going to start? It's going to start on
July 2021.
1st July 2021. Another thing we should look at, note 2, QCE, capital expenditure, that was acquired during the pioneer period. This was the qualified capital expenditure that was acquired during what? The pioneer period. When are we going to assume this qualified capital expenditure is acquired? We are going to assume this qualified capital expenditure is acquired in the first day of the what?
Of the
post-pioneer period. And the first day of the post-pioneer period is 1st of July 2020 what? 2021. And for the post-pioneer period, we are going to apply commencement rule. We are going to apply what? Commencement rule. Now, first thing is, let's go to the working note. Let's go and compute qualified capital expenditure, capital allowance on this qualified capital expenditure. Let's go and compute it in the working note. For the post-pioneer period, we need to know the basis period if you want to follow commencement rule. What is the basis period of the post-pioneer period? We need to know that. How do we know that? How do we know that? Let me just open an Excel for us to understand. How do we get the basis period of the post-pioneer period? Post-pioneer period. The post-pioneer period, we want to apply commencement rule. The year of assessment. Year of assessment, basis period. We want to follow commencement rule. And in the post-pioneer period, we are told in the question that the accounting year end is 31st of December. You know, the pioneer period end 30th of June 2021. That means the first basis period of the post-pioneer period is going to start 1st of July 2021 to the accounting year end. What is the accounting year end of this company? 31st of December
2021.
2021. So what will be the year of assessment of this one? Following the commencement through. The year of assessment is going to be which year?
2022.
2022. We are following the commencement through. The year of assessment will be 2022, since it ends in 2021. Second year of assessment, 2023. Second year of assessment, 2023. That one will start in what?
1st January.
Of January 2022
to 30 December. 31st December 2022.
31st December 2022. If there is any third year of assessment, the same pattern. If there is any third year of assessment in the question, the same pattern. 1st of January 2023 to 31st December 2023. Now, the first year of assessment is how many months?
6 months.
6 months. Why computing our capital allowance in the first year of assessment? Our annual allowance is going to be 6 months. That means our annual allowance is going to be what? Prorated. Do you agree with me?
Yeah.
So let's go back to the question. Now, the qualified capital expenditure that was acquired during the pioneer period, we are going to assume it was acquired on the first day of the post-pioneer period. That means we are going to assume it was acquired 1st of July 2021. So while computing the qualified capital expenditure, we have industrial building, we have in the qualified capital expenditure, what are the assets we have? We have buildings, we have plant and machineries, we have motor vehicle and
Furniture.
And furnitures. So in the buildings, how do we get the initial allowance for the building? The cost of the building is 2,400,000. That is the cost of the building. 2,400,000. That is the cost of the building. The initial allowance on building is going to be what? 15%
of
the cost of the building. Abi?
Yeah.
Yes, sir.
15 million. 15 million of the cost of the building is going to give us what? 15 million of the cost of the building. That will give us what?
15%, sir.
Yeah. 15% of the cost of the building is going to give us
360,000.
360,000. For the second one, plant and machinery, 50% of the cost of the plant and machinery, 1,150,000. Why? For motor vehicle, 50% of the cost of the motor vehicle. That will give us what? 50% of the cost of the motor vehicle.
750.
750,000. For furniture and fitting, what is the cost of furniture and fitting?
750.
5%.
The initial allowance is going to be what? 25%, Abi?
25%. Yes, sir.
Yeah.
So that will give us how much?
187,500.
187,500. Now, what we need to understand now is I need to do correction in the building. I make representative, the building was stated twice. I want to correct it now. So just give me 5 minutes. The building was stated twice, which is not supposed to be so. 2.4 million was stated twice. So at the end of the day, the total initial allowance is going to be 2,425,500. Why? For the annual allowance, how do we get annual allowance? If we want to get annual allowance for building, we are going to say 2.4 million, which is the cost, minus what? Initial allowance, 360. Divided by what? Number of years. How many years will the building stay?
6 months.
How many years will the building stay? 10 years, Abi?
10 years,
times
yes.
6
over
over 12. Let me do this demonstration on how we get the industrial building. Let me do it in an Excel for us to understand. I will just do the one of industrial building only. Only industrial building. So industrial building, the cost is 2.4. 2.4. That is the cost for industrial building. Less initial allowance. If you less initial allowance, which is what? 360. If you less it. The balance is going to be what? 2,040,000. This balance, how do we get the annual allowance? 2,040,000 divided by 10. That is annual allowance for 1 year. But the annual allowance for 6 months, because the basis period is for 6 months, is now going to be what? This times 6 divided by what? 12, which is what? 102. That is annual allowance for 6 months. That is how we get annual allowance for industrial building. The same pattern for plant and machinery. Cost 2,250,000 minus initial allowance, 1,125,000. How many years will plant and machinery stay? 4 years, which is 100 divided by 25. 4 years. That means we divide 2,250,000 minus 1,125,000 divided by 4. We are going to get the annual allowance for full year. We are now going to prorate it 6/12. So we get, at the end of the day, the total capital allowance we get in the year 2022 year of assessment is 3,040,125. Year 2023 year of assessment, the total capital allowance we will get in the year 2023 year of assessment, we are going to claim 12-month annual allowance because the basis period is 12 months. Do you understand? Do you understand?
Yes, sir.
So at the end of the day, the total capital allowance for year 2023 year of assessment is 785,250. Once you have get your capital allowance, you can now go and compute your tax liability for the what? For the post-pioneer period. I want to compute tax liability for the what? Post-pioneer period. I need the tax liability for the post-pioneer period. What will be my tax liability for the post-pioneer period? What are the profits of the post-pioneer period we have? What are the profits of the post-pioneer period? So look at the question. In the post-pioneer period, the first profit given to us for the 6 months from July to December 2021, the first profit given to us is how much? 1.8. Why? Another profit from January to December 2022 is how much? 2.7. That means we are going to compute tax liability for only 2 years of assessment. The first year of assessment is going to be 2022 year of assessment. The first year of assessment is going to be what? 2022 year of assessment. Why? The basis period is going to be what? From 1st of July 2021 to 31st of December 2021. Adjusted profit for that period is 1.8. What is the capital allowance for year 2022 year of assessment? The capital allowance for year 2022 year of assessment is 3,040,125. Now, Emini Tiles is a manufacturing company. You know, manufacturing company and agro-allied company, we don't normally restrict capital allowance for them. We claim the full capital allowance. Restrictions don't apply to them. My question is that how much are we going to claim as capital allowance in this year, 2022 year of assessment, since Emini Tiles is a manufacturing company? How much are we going to claim as capital allowance?
1.8 million.
1.8 million. Since the profit is less than the capital allowance, we are going to use the profit to reduce the capital allowance. Since the profit is 1.8 million and the capital allowance is 3.4 million, 3,040,000, that means that 1.8 million, we are going to use it as the capital allowance. So if you less your capital, the capital allowance for the year, the capital allowance we are going to relieve is 1.8 million. The capital allowance you are going to carry forward is 1,240,125. I want to ask you another question. If Emini Tiles is a trading company or service company, it's not a manufacturing company, how much capital allowance are we going to claim in the case of Emini Tiles, assuming it's a trading company or service company?
The capital allowance will be restricted to 2/3 of the computed capital allowance. That is 2/3. That is 66 2/3.
2/3 of the adjusted profit. 2/3 of what? 1.8. Do you understand?
So please, can you come again?
What I'm saying is, assuming Emini Ties is not a manufacturing company, it's a trading company. They are not manufacturing anything. They normally buy good and sell. In this case, how much capital allowance are we going to claim? We are going to restrict, since it's not a manufacturing company. I'm assuming, I'm just giving another scenario. We are going to restrict it to 2/3 of the adjusted profit. How much is the adjusted profit?
1.8.
That means the capital allowance we are going to claim will be 2/3 times 1.8, which is 1.2. 1.2 million is the capital allowance we are going to claim. So that at the end of the day, there will be a balance of profit that is going to pay tax on. Do you agree with me?
Yes, sir.
But in this case, we are solving this, in this question we are solving. Emini Ties is what? A manufacturing company. It manufactures ties. Manufacturing company, restrictions don't apply to them. Restrictions don't apply to them. Since restriction does not apply to them, how much capital allowance are we going to claim? Since the adjusted profit is less than the capital allowance. If it is a manufacturing company or agricultural company, if adjusted profit is less than the capital allowance, the whole adjusted profit is going to be used to reduce what?
The capital allowance.
It's going to be used.
We can't hear you again. No.
So, in this case now, the 1.8, we are going to use it to reduce capital allowance. And our capital allowance carried forward is going to be 1,240,125. At the end of the day, do we have total profit or taxable profit in this year, 2022 year of assessment? Do you have any total profit? Total profit means adjusted profit less capital allowance. Do we have that?
No.
In this year, 2022 year of assessment, do we have adjusted profit, total profit?
No, sir. No.
So our total profit is nil. Is nil. Taxable profit or total profit is nil. Now let's compute our tax liability. CIT, 30% of total profit. We don't have total profit. That means my CIT is nil. But TET, which is tertiary education tax, as at year 2022, 2.5% of what? TET is computed on what profit?
Adjusted profit.
Just adjusted profit.
On adjusted profit, 2.5% of adjusted profit. That will give us 45,000. 45,000. Now we move to year 2023, year of assessment. Year 2023, year of assessment. The adjusted the year 2023 year of assessment, the basis period for this year, 1st of January 2022 to 31st December 2022. The adjusted profit is 2,700,000. The capital allowance that will be brought forward, the one that was carried forward in 2022 year of assessment, is going to be brought forward in 2023 year of assessment, which is 1,240,125. The capital allowance for the year 2022 is 785,250. If you add the two together, 1,240,125 plus 785,250, if you add the two of them together, they are less than the adjusted profit. Abi? They are less than the 2.7. That means I'm going to claim the whole capital allowance now. If you sum the two of them together, it's going to give you 2,025,375. Since they are less than the adjusted profit, I'm going to claim them. I'm going to do what? Claim that 2,025,375. Yes. I will let them from. So there is no capital allowance carried forward. And my total profit is going to be what? 674,625. Mind you, assuming Eminent Ties is a trading company, it's not a manufacturing company. You are going to check for 2/3. 2/3 of what? 2/3 of what?
Adjusted profit.
2/3 of 2.7 is how much?
$1.8.
1.8. That means, assuming it's a trading company, you will not claim all the capital allowance. The capital allowance you are going to claim is going to be what?
1.8.
1.8. Since the 2/3 is less than the total capital allowance. Do you agree with me? If
Yes,
it is a trading company, but it is a manufacturing company, restriction does not apply to them in this question.
Sir, please, I have a question on the chat. Please answer, please.
Okay, what is your question? Okay, you write a question. I will answer your question. I will answer your question. So at the end of the day, the total profit is 674,625. Tax liability, CIT, 30% of total profit, 30% of 674,625. It will give us 202,387.5. Why education tax? 2.5% of what? Adjusted profit. 2.5% of what? Adjusted profit. That will give us how much? 2.5% of 2.7. That will give us 67,500. So your question said, why do we use investment allowance under plant and machinery? I agree with you. Investment allowance has been deleted in the Finance Act 2023, which is effective in 2024. But as a 2022 year of assessment, investment allowance is still applicable. But right now, there is no investment allowance. Finance Act 2023 have been deleted it. Assuming this question started from 2024 year of assessment, I will not incorporate investment allowance. But this question started in 2022 year of assessment. As a 2022 year of assessment, there is still investment allowance. Hope your question has been answered. So at the end of the day, this is the tax liability is going to pay in the second year of assessment for the post-pioneer period. The post-pioneer period has 2 years, 2022 year of assessment, 2023 year of assessment. So this is it on this question. Do we have any question? Any issue?
Sir,
Do you have any question? Yes.
still on the
Go ahead.
restriction of capital allowance. I think for trading company, you said is only when the profit, the capital allowance is higher than the adjusted profit. But in this case, we just saw the capital allowance was not higher than the profit.
It's not only when the capital allowance is higher than the adjusted profit. Anytime the capital allowance is more than the 2/3 of the adjusted profit, you have to restrict.
Okay. Thank you.
You have to restrict. Okay, thank you very much. We can go to question 3. Question 3. Question 3.
Question, sir.
Let's look. Okay.
Yes. So in this question now, because our first year of assessment, the computation results into a nil. The CIT computation is a nil figure. So in a situation whereby this type of question, we are given information for turnover. So we are supposed to compute minimum tax. If we compute minimum tax, are we going to compute only for the year that resulted into nil figure for CIT?
No, we will not compute minimum tax. Why? Because we assume for the post-pioneer period, in the post-pioneer period, what are we going to assume the company just commenced? We are going to assume the company just commenced a new what?
Business.
A new business. If in the post-pioneer period, we are going to assume the company just commenced a new business, and one of the exemptions to the minimum tax is every company in their first 4 years of what?
Operation.
There are some companies that are exempted from minimum tax. Abi? If you read minimum tax very well, some companies, they are exempted from minimum tax. Agricultural company is exempted from minimum tax. Every company in their first 4 years of operation, if you are just commencing a business, in your first 4 years of assessment, you will not pay minimum tax. It's one of the exemptions to minimum tax. Do you understand?
Yes, sir. Thank you.
Okay. So let's look at question 2. Question 2. Somebody practice question 3. Practice question 3. Question 2 is what we look at last. Practice question 3. Can we quickly look at that? Broadway. Oh, yeah.
Broadway Limited was incorporated on 31st May 2014 as a manufacturer of plastic products. 4 of the shareholders of the company, who are Lebanese, decided to invest substantially with the aim of becoming members of the board of directors. The promoters decided to apply for a pioneer status within the provisions of the Industrial Development Income Tax Relief Act, Cap 17, LFN 2004. The company was granted a pioneer certificate with a production date certified as 1st August 2016. The following information has been extracted from the company's record. Net profit for the financial period ended 31 July 2023, 25,005,000 naira. Depreciation, 496,435 naira. The Federal Inland Revenue Service certified the following expenditure up to and including the year ended 31 July 2019. Industrial building, non-industrial building, plant and machinery, motor vehicles, all figures are assumed to be correct. The promoters of Broadway Limited have declined to apply for the extension of the pioneer period. You are required to Advise the management on the tax implications for the relevant years of assessment.
Okay, thank you very much. You are required to advise. This is a question of advice. You will write a letter to the managing director of Broadway Limited, located in Lagos. You want to advise them. Our computation will be in form of working notes. We are asked to advise. We are not asked to compute. If you are asked to advise as a tax consultant, that means you need to form a name of tax consultant. In the question, if they say, as a tax consultant, to advise the company on the implication, on the tax implication for the relevant year of assessment, you need to form the name of tax consultant. You can form the name XYZ and Co, chartered accountant or chartered tax practitioner. November 2024, you address the letter, the managing director, Broadway Limited. You have to advise on pioneer status. In this, your advice, they are not asking for computation or loan. They are asking you, what is the tax implication of pioneer incentive? What is the tax implication of pioneer incentive? Though you are going to do the computations too. Look at my solution. Advice on pioneer status. I said, with regard to your request on the subject matter, we like to comment as follows. My first point is, you will tell them, when does the pioneer incentive, pioneer status start? With the certification of 1st of August 4, 2026 as the production date, and there is no exemption. The pioneer period shall be from what? August 1st, 2016. August 1st, 2016. To when?
July 31st.
2019. That will make it how many years? That will make it how many years?
3 years.
3 years.
3 years. The pioneer period is 3 years. Since it starts in August 1st, 2006. It will end in 31st of July 2019. That is the first point. You need to tell them your pioneer period. Second point, you need to let them know that the profit made during what? During the pioneer period is going to be exempted from what? From tax. If I were you, I can expatiate it. It's going to be exempted from company income tax. It's going to be exempted from company income tax, education tax, and what other tax? And police development levy. Police development levy. You also need to let them know that loss that was made during the pioneer period is going to be carried forward to what? To the post-pioneer period. Loss that was made during the pioneer period is going to be carried forward to the what? To the post-pioneer period. You also need to let them know that qualified capital expenditures acquired during the pioneer period. Qualified capital expenditures acquired during the pioneer period the qualified capital expenditure acquired during the pioneer period is going to be assumed to have been acquired in the first day of the what? Post-pioneer period. Which capital allowance is going to be computed after the pioneer period. Another point we need to let them know is post-pioneer period. After the pioneer period, for the post-pioneer period, you are going to assume the company just commence what? A business. And commencement through is going to apply to determine what? The assessable profit. You also need to let them know in your point that, since that company, broad-based, is a manufacturing company, there will not be restriction of what? There will not be restriction of what?
Capital allowance.
Capital allowance. Now, after you have take your point, the other point you are going to mention now is going to be from your what? From your task computation. Let's go back to this question. In this question now, this net profit given to us ending 30th of July 2023, they now give us depreciation. The first thing we need to do, this net profit given to us and the depreciation, we need to first convert it to what? We convert it to what? What do we convert this to? We convert it to adjusted profit. You know, it's a net profit given to us, not adjusted profit. Net profit, add back depreciation, which is disallowable expensive. It's going to give you what?
Taxable income profit.
Net profit.
It's going to give us adjusted profit. That means this depreciation, we are going to add it back to what? To the 25,005,000, so that we get our adjusted profit. My question is, how many periods does this adjusted profit we are going to get, how many periods is it going to be covered? How many periods? Because they say net profit for the period ended 30th July 2020 what? 2023. My question is, when does this period start? This period ended that they are referring to. When the period starts?
1st of August 2016.
No.
1st of August 2016. That is the period when the pioneer production day starts, when the pioneer period starts. From 1st of August 2016 to 31st July 2023, how many years is this profit? How many years?
8 years.
8 years. 1st of August 2016. By 2017, 1 year.
7 years.
2018, 2 years. 2019, 3 years. 2020, 4 years. 2021, 5 years. 2022, 6 years. 2023, 7 years. This is 7 years. Out of the 7 years, the post-pioneer period is for how many years?
It's for 4 years.
4 years. Because the pioneer period will be for 3 years. You know, for the pioneer period, they are not going to pay tax. The post-pioneer period is going to be for 4 years. When does the post-pioneer period start? When does the post-pioneer period start? The post-pioneer period, when does it start?
1st of August 2019.
1st of August 2019. That is when the post-pioneer period starts. 1st of August 2019. You can see, as part of our working note, we get adjusted profit first. Our adjusted profit is 25,501,435. The profit for the post-pioneer period is 2017, 18, 19. And that profit of the post-pioneer period is going to be exempted from tax. Now, the post-pioneer period starts in 2019, August 2019. According to accounting year end of this company, they normally end the account July. When something starts August 2019, when is it going to be the year of year end? The year end is going to be July 31st of July 20 what? 2020. That basis period for the first year of the post-pioneer period, the basis period for the first year of the post-pioneer period, the year of assessment is going to be 2021. Abi?
Yes,
the
sir.
year of assessment is going to be 2021. The adjusted profit is going to be 3,643,062.14. How do we get this 3,643,062.14? How do we get that? How we get that is, we know that the adjusted profit is 25,501,435,000. This adjusted profit is for how many years? Like we said, it's for how many years?
4 years.
No, it's not for 4 years.
No, sir. It's for 3 years.
It includes the pioneer period now.
Okay. That's 7 years.
7 years. That means this 25,501,435, we are going to divide it by how many?
7.
7. Do you agree with me?
Yes.
We are going to divide it by 7. Out of the 7 years, 3 years belong to the pioneer period. Why 4 years belong to what? The post-pioneer period. But the profit for all the 7 years is going to be the same. Do you agree with me?
Yes, sir.
The profit for all the 7 years is going to be the same. So for the first year of assessment, 2021, basis period, 1st of August 2019 to 31st of July 2020. The adjusted profit is 3,643,062.14. The capital allowance. How do we get the capital allowance? We are told in the question that the capital allowance that was incurred during the pioneer period. You know, the pioneer period ending when? July 31st of July 2019. That is when the pioneer period ended. The pioneer period ending that. So the capital allowance that was incurred during the pioneer period, industrial building, non-industrial building, plant and machinery, motor vehicle, all this was incurred during what? The pioneer period. When are we going to assume they are incurred? When are we going to assume they have incurred and we are going to compute capital allowance? When do we assume
production date?
First of
day of what?
August. First day of August 2019. In commencement as
First
in
day
form
of the post pioneer period, which is 1st of August 2019. First day of the post pioneer period. The first day of the post pioneer period is 1st of August 2019. That is when we are going to assume it was incurred. 1st of August 2019. Do you understand? 1st of August 2019. That is the when we are going to assume it was incurred. So why computing the capital allowance? Year 2021 year of assessment. Cost for industrial building 6,142,500. For non-industrial 2,990,000. For plant and machinery 4,631,250. Why for motor vehicle 4,062,500. Initial allowance 10%, 15% of the cost for the industrial building, and for non-industrial building too, 15% of the cost. 15% of 6,142,500 is going to give us 921,375. 15% of 2,990,000 is going to give us 448,500. 50% of 4 million for plant and machinery. 50% of 4,631,550 is going to give us 2,315,625. Why for motor vehicle? 50% of 4,062,500 is going to give us 2,031,250. At the end of the day, the total initial allowance is 5,716,750. Annual allowance. How many periods will this annual allowance cover? Who can tell me how many periods? How many periods? If you look at the first year of assessment of the post pioneer period, that first year of assessment, the basis period is how many months?
6 months.
6 months? Look at it
year.
very well.
1
It's
year.
for 12 months. It's
year,
12 months. That means this annual allowance is not going to be prorated. It's going to be for 1 year, like the other question we saw when we prorate the annual allowance. We are not prorating this annual allowance. We are going to claim for 1 year, since the basis period 2 is 1 year. How do we get annual allowance for this building? Let me use that as an example. 6,142,500, which is the cost, minus initial allowance, 921,375. If you minus that from the cost, if you minus the initial allowance from the cost, you divide it by number of years. The number of years for this industrial building is 10 years. At the end of the day, you are going to get annual allowance of 522,113. 522,113. So in the first year of assessment, which is year 2021, our total capital allowance that we get is 8,042,856. 8,042,856. Why getting that? Let's go back to the computation of the tax liability. We want to get the tax liability for the post-pioneer period. The adjusted profit is 3,643,0621.04. Why the capital allowance for the year is 8,042,856. 42,856.25. How much is the capital allowance am I going to relieve in this case? How much capital allowance am I going to relieve? How much capital allowance will you relieve? The whole adjusted profit is going to be used to relieve the capital allowance because Broadway is a manufacturing company. When I remove the whole adjusted profit from the capital allowance, the balance capital allowance that we carry forward is 4,399,794.11. That is the balanced capital allowance that will be carried forward. In that case, my total profit or taxable profit is nil. If I want to compute my tax liability as a 2021 year of assessment, CIT 30% of total profit, nil. TET 2% of adjusted profit, 2% of 3,643,062 naira.4. That is going to give you 72,861.24. I move to year 2022 year of assessment. Year 2022 year of assessment. The adjusted profit for that year 2022 year of assessment is still the same amount, 3,643,062.14. The capital allowance that will be brought forward from year 2021 year of assessment is what? 4,399,794. The capital allowance for the year 2022 year of assessment is how much? 1,862,981. That is the capital allowance for the year. Now, if we add the two of them, they are still more than the profit available. How much will the capital allowance I'm going to relieve in this second year? The whole profit in the second year too is going to be used to relieve the capital allowance, since the capital allowance is still much. If I use the whole profit, 3,643,062 to relieve the capital allowance, the balance capital allowance that will be carried forward to the third year of assessment is going to be what? 2,619,713.21. No total profit. So tax liability, 30% of total profit, nil. Education tax, 2.5% of adjusted profit. 2.5% of what? 2.5% of 3,643,062. That will give us 91,076.55. That takes us to the third year of assessment, which is year 2023. The adjusted profit still remains the same. For all the year, the adjusted profit is the same, 3,643,062. The capital allowance available that was brought forward for the last year, 2,619,713. The capital allowance for the year is how much? 1,862,981. How much am I going to relieve? If I add the capital allowance available, they are still more than the profit. I'm still going to use the profit of the third year of assessment to relieve the capital allowance. I'm still going to use the third year profit to relieve the capital allowance. If I use that, the capital allowance that will be carried forward is going to be 839,632.32. No total profit or taxable profit. Tax liability, education tax, 30% nil, because it's based on total profit or taxable profit. Company income tax, 30% nil, because it's based on total profit or taxable profit. In the case of education tax, that one is based on adjusted profit. 2.5% of adjusted profit. That will give us 91,076.55. That is going to take us to the third year of assessment. The third year of assessment, 2024. The adjusted profit still remains the same, 3,643,062.14. The capital allowance brought forward 839,632.32. The capital allowance for the year 1,862,961.25. If we add the two of them, both the brought forward and for the year, they are less adjusted profit. If we add the two of them is going to give you 2,702,593. When you add the two of them, that is what is going to give you. When it gives you that, since it's less than the adjusted profit, that means the capital allowance I'm going to relieve for the year is going to be 2,702,593. No capital allowance that will be carried forward. That means my total profit is going to be what? My total profit is going to be what? 940,000. Hold on. 940,468.57. 940,468.57. What is the tax liability? For company income tax, 30% of total profit, 30% of 940,468.57. It's going to give us 282,140,000. Why? For education tax, 3% of adjusted profit, 3% of 3,643,062 is going to give us 109,291. Once we finish this tax computation, we are going to incorporate it in our report. Look at my report. I said, based on the information provided, applying commencement rule, tertiary education is going to be payable as follows: 2021 year of assessment, 2022 year of assessment, 2023 year of assessment, and 2024 year of assessment. They will pay tertiary education tax. Why company income tax is only going to be paid in 2024 year of assessment, and the company income tax that we paid in 2024 year of assessment is 282,140. Please note that tax authority carry out post-pioneer audits period of the company, and the FRS also required to certify the qualified capital expenditure acquired during the pioneer period. Please revert to us for further clarification as may be required. Yours faithful. That's that. So this one too, these workings carry Marco, but the major requirement of this question is to advise, which you are going to incorporate it. Your workings is going to be incorporated in your advice. Hope this is clear. Hope this is clear. Any question on this? Any question on this? In the absence of no question on this, we are going to look at one more question. The one more question we are going to look at is still the same, is still easy question. On Friday, number 2 question, that is when we are going to look at it. That means on Friday next week, that is when we are going to finish pioneer legislation. Number 2 question is going to be looked at on Friday. Which other question can we look at? Let's look at another question. Okay, the other question we can look at, I think this is fine. Question 5. We can look at question 5. Question 5. Yeah, question 5. Practice question 4. No, question 4. Let's look at question 4. Somebody should help us read question 4. Question 4. Oh yeah, somebody should help us read question 4.
The Industrial Development Income Tax Relief Act CAP 17 LFN 2004 makes provision for tax reliefs for certain companies that have been issued with pioneer certificates. In order to take advantage of the tax incentive, Solid Rock Cement Limited was incorporated on October 1st, 2014 to manufacture cement and was granted a pioneer certificate for 3 years, with its production days certified as January 1st, 2017. At the end of the pioneer period, the company continued in business and adopted September 30th as its year end. You have been provided with the following information. Accumulated losses as at 31/12/2019, 300,000. Adjusted profit for the 9 months ended 30th/9/2020, 102,000. Adjusted profit for the 12 months ended 30th/9/2021, 1,080,000, and year ended 30th/9/2022, 1,250,000. Capital expenditure incurred during the pioneer period: buildings, plant and machinery, motor vehicles, furniture. All the capital expenditures and the losses were certified by the Federal Inland Revenue Service, FIRS. During the pioneer period, the company imported
Continue.
During the pioneer period, the company imported the same products for which it was granted pioneer status and made profit of 900 million naira and 800 million naira for the year ended December 31, 2018 and 2019. Required. As the tax consultant to the company, you are to advise the management of the company on the tax implications for the relevant years of assessment.
Thank you very much. Thank you very much. You have to advise on the tax implication for the relevant year of assessment. So they are not asking us for tax computation, but we compute tax computation. They are asking us for advice. That means they want us to write a report. As a tax consultant, you have to advise the management on the tax. Advice is in form of report, but your computation will be in form of appendix. Your computation will be in form of what? Appendix. If you want to answer this question, like my own BDI and co-tax consultant, number 24, Ikorodu Road. Number 24, Ikorodu what? Ikorodu Road. PO Box 540, Marina, Lagos. January 12, 2020. The managing director, Solid Rock Cement, Ikorodu, Lagos. Dear sir, advice on tax implication of pioneer period and what? Post-pioneer period. Your subject matter can be informal. You can say advice on tax implication of pioneer status. Or if you want to expatiate it, advice on the tax implication of pioneer period and post-pioneer period. Advice in the tax implication of pioneer period and post-pioneer period. In respect to your request on the above subject matter, we wish to advise you as follows. In your first advice, the first point you need to mention is the pioneer period. Is what? The pioneer period. In this question, when is the pioneer period start? When is it going to end? The pioneer period started when?
1st January 2017.
That means it's going to end when?
31st December 2019.
2019. So your first point is to tell them that the pioneer period lasted for 3 years, from 1st of January 2017, which is the production day, to 31st December 2019, since there is no extension of the period. Second point, my people, you let them know that profit made during the pioneer period is going to be exempted from what? From tax. This company, Solid Rock, they are giving pioneer certificate to do what? To manufacture what? To manufacture what product?
Cement.
Cement. That means the pioneer product is what?
Cement.
Manufacturing of cement. Don't say cement. Manufacturing of what? Cement. If during the pioneer period, they went ahead to go and import cement, is importation of cement pioneer products?
No.
I'm asking.
No.
No. It's a non-pioneer product. What will happen to non-pioneer products? Profit from non-pioneer product made by company during the pioneer period is going to be what?
Taxed.
It's going to be taxed.
Yes.
It's going to be taxed. Look at this question now. Look at this question. Look at this question. They said during the pioneer period, the company imported same product which it was granted pioneer status. They go and import the same cement and they made a profit. 900 million. Second one, 800 million. Those are the profit that was made. So my question is, My question is, that profit that was made, is it going to be subjected to tax or exempted from tax?
Subjected to tax.
Subjected to tax is because it's a non-pioneer product. Tax authority cannot give you pioneer status to go and import something. They will give you pioneer status to do what? To manufacture. To do what? Manufacture. Importation does not contribute to our economic growth. It's manufacture. By the time we started manufacturing in Nigeria, we are going to employ people. Abi? The raw material we are using to manufacture, we are going to buy it internally. It's going to create, even the price of the goods and services will reduce.
Please, sir.
Yes.
Will the action of this company in this context not attract sanction because they were giving pioneer certificates to produce and they ended up importing?
It will not be attract sanction. It will not be attract sanction. They will just pay tax on that non-pioneer product. They will just pay on the non-pioneer product. It will not attract sanction. They will just pay tax on the non-pioneer products. Now, profit made during the pioneer period from pioneer enterprise, manufacturing of cement, are what? Are exempted from tax. That is point 2. Why profit made from importation of cement, which is non-pioneer product, are what? Are taxable. Do you understand the point 2? That is point 2 you need to raise. Point 3 you need to raise in this question. Net losses incurred during the pioneer period. Look at it. During the pioneer period, look at the question. They said accumulated losses as at when? 31st December 2019. These accumulated losses of 300 million was incurred when? It was incurred when?
During the pioneer period.
Because pioneer period end when?
1st December 2019.
So what will happen to these accumulated losses incurred? How are we going to treat it? How are we going to treat it? How we are going to how we are going to treat it? So how are we going to treat it? If you make a loss during the pioneer period, that loss must be certified by who first? It must be certified by who?
FRS.
By FRS. And that loss is going to be relieved against the profit of what? Against the profit of post what?
Post-pioneer period.
Period. So that is point 3. We let them know that the net loss incurred during the pioneer period and certified by who? FRS is going to be available for relief against the profit of the new trade after the pioneer period, which means against the profit of the post-pioneer period. Against the profit of the post-pioneer period. Point D. Another point. The qualified capital expenditure incurred during the pioneer period as certified by FRS is going to be assumed to have been incurred on the first day of what? Post-pioneer period. When is the first day of post-pioneer period? When is the first day of post-pioneer period? Since pioneer period ends 31st of December 2019, the first day of post-pioneer period is going to be what?
1st of January 2020.
So that is when we are going to assume that qualified capital expenditure was incurred. Do you understand? So we need to let them know that. Now, let's go to the computation. That is where I'm after. Let's go to the computation. Let me go and compute the profit, the tax liability. For the post-pioneer period started in 1st of January 2020. When is the accounting year end of this company? When is the accounting year end of this company? After the post-pioneer period. When is the accounting year end?
September.
30th September. That means the first basis period of post-pioneer period is going to start when and end when? The first basis period of the post-pioneer period will start when and end when? The first basic period is going to start 1st of January 2020. And
then 30th
end
2020.
30th September 2020. That will be the year of assessment. Is going to be what? 2021. Commencement through. Year of assessment is going to be 2021. Commencement rule. 2021. The basis period is 2020. Do you agree with me? Do you agree with me? The year of assessment is 2021, while the basis period is ending 2020. From the date of commencement to the date of first end of accounting year. Adjusted profit based on this period is how much? In the question, adjusted profit based on this period is how much?
102
You can see
million.
adjusted profit for the 9 months ending 30th September 2020 is 102 million. 102 million. Look at the 102 million. Loss brought forward. How much am I going to brought forward as loss? The loss that was incurred in the pioneer period. I will brought it forward to the post-pioneer period. How much is the loss brought forward? 300,000. Loss relief. How much am I going to relieve from the loss? Look at the profit available, 102. The loss is what? 300. I'm going to relieve 102. I'm going to use this profit to relieve the loss. The loss I will carry forward is going to be how much? 198. I will carry it forward to the next year of assessment. The capital allowance for the year 2021 year of assessment, the capital allowance is 1,133,250 because we are using 1,000 up. No profit to relieve the capital allowance since we have used the loss. Since we have used the profit to reduce the loss, there is no profit we are going to use to relieve the capital allowance. That means the capital allowance is going to be carried forward. Abi? There is no total profit in the first year of assessment. Tax liability. How do I compute the tax liability? CIT, 30% of total profit. NIL. TET, 2% of what? 2% of what?
Adjusted profit.
2% of 102 million is going to give us 2,040,000. 2,040,000. That is year 2021 year of assessment. Second year of commencement, year 2022 year of assessment. That one is going to start from the beginning of accounting year, which is, this one ends in 30th September 2020. The first year of assessment, the basis period ends in 30th September 2020. That means the second year of assessment, the basis period is going to start when?
1st October 2020.
1st October 2020. And it's going to end when?
30th September 2021.
2021. Preceding year basis. Preceding year basis. What is the adjusted profit based on this period? What is the adjusted profit based on this period?
1,080,000,000.
What is 1,080,000,000? We are giving that. Since we are giving that 1,080,000,000, loss that will be brought forward. How much is the loss that was brought forward? 198,000. Loss that was brought forward from the previous year of assessment, 198,000. Since we have enough profit on ground, that means we can relieve all the loss. We can relieve what? All the loss. That means the whole 198 million, I'm going to relieve it. At the end of the day, if I relieve it, the assessable profit remaining after removing the loss from 1.8 million is going to be 882,000, which is 882 million because of the 1,000 we are using. From this one, capital allowance for the last year, for 2021 year of assessment, was carried forward. That means it's going to be brought forward in 2022. That is 1,133,250. 1,133,250,000. The capital allowance for the year 2022 year of assessment is 291 million. Look at the profit available. What is the remaining profit that we want to use to remove the to minus the capital allowance for? What is the remaining profit? What is the remaining profit that we want to minus the capital allowance for? What is the remaining profit?
8,200.
Since this profit
882,000
is less than the sum of the two capital allowance, that means this whole profit, we are going to use it to remove the capital allowance. This whole profit, we are going to use it to reduce the capital allowance. At the end of the day, the balance capital allowance that we carry forward is going to be 542,250,000. No total profit. CIT 30%, nil. 2.5% of adjusted profit. 2.5% of 1,080,000,000. That will give us 27 million. Year 2023 year of assessment, which is the third year of the post-pioneer. That one basis period is 4th October 2021 to 30th September 2022. The adjusted profit for that one is 1,250,000,000. The capital allowance we brought forward from last year, 542,250,000. Capital allowance for the year, for the third year of assessment, 291 million. If we add the two of them, they are less than the profit available. The two of them are less than what?
Profit.
The profit available. That means we are going to minus them from the profit. If we minus them from the profit, there will not be capital allowance carried forward. My total profit is going to be 416,750,000. That means my CIT, company income tax, is going to be what? 30% of 416,750 is giving us 125,025,000. My
PAT.
CET, that is 2.5% of adjusted profit, 2.5% of 1,250,000,000. That is 31,250,000. That is how we can put it. Second thing you need to do, that non-pioneer products, you are going to compute tax on them. One of them was in 2019 year of assessment. One of them is 2020 year of assessment. The non-pioneer product profit is 9 million naira, 900 million naira. No capital allowance. CIT 30% of 900 million naira, 270 million. TET 2% of 900 million naira, 18 million. Second year for the non-pioneer product, second year profit is 800 million naira. 30% of 800, there is no capital allowance. 240 million for CIT. For TET, 2% of 800 million naira, 16 million. Once you finish computing your tax, in your report, look at my report. I now do the summary of tasks in my report based on the information extracted from the company record, applying the relevant provision of Industrial Development Act. Once I'm applying that, the Company Income Tax Act and Tertiary Education Tax, the company tax liability as presented below. Look at it. Year of assessment 2019, which is the pioneer period, they pay CIT of 270,000, TET of 18 million. This was from the non-pioneer product. Do you agree with me? This was from the non-pioneer product. Do you understand? 2020 year of assessment, CIT 240 million, TET 60 million. Still from the non-pioneer product. Year 2021 year of assessment, which is the post-pioneer period, is still during the post-pioneer period. Post-pioneer period, no CIT, but there is TET of 2,040,000. Year 2022, no CIT, but there is TET of 27 million. Year 2023, there is CIT of 125,025, and there is TET of 31,250,000. So you are going to incorporate this tax summary in your report. At the end of the day, all relevant computations show approved, and in the appendix, you write it as part of your report. Please free to contact us in case of further inquiry. So, ladies and gentlemen, any question on this? Any question, any issue on this? Do you have any question, any issue?
No issues, sir.
So this is the third question we have solved on pioneer status. So on Friday, we are going to solve the number 2 question on the pioneer legislation so that we move to the next topic. Our next topic is double taxation relief, which we are going to start on Sunday next week. So since there is no question, thank you for having me. Have a nice day.
Thank you very much, Mr. Idris.